got to understand that if you see a $500,000 balance in your IRA, that's not all yours. Only about 60% of it's yours. There's quite a potential for Uncle Sam to be about a 40% partner in your hard-earned retirement funds. They own about 40% of your account, folks.
This is, I think, a very interesting topic, and it's something we do see a lot of with some of our clients, especially some of our wealthier clients who have contributed to those tax-deferred accounts or basically their entire working lives. And we always hear, save as much as you can in your 401k, save as much as you can in your IRA, put everything into there. And that's great because you're taking advantage of that tax-deferred growth, and that money is growing tax-free, so it's growing faster while you're contributing to it. But the issue arises when you go to take that money out in retirement, and we find that people are not prepared for how much taxes they're going to be paying in retirement, how high their reported income is going to be in retirement. That affects a lot of things, Social Security, Medicare, as we know. So it's also something that people don't hear a lot of from financial advisors is this tax bomb situation.
So many folks are in this tax trap, where they've, contributed their whole life to 401ks, IRAs, and they were never educated on the tax deferred or the tax free buckets. They have everything in a tax deferred bucket. And so this is a huge challenge for folks because of the massive tax burden that's coming. So imagine you worked your butts off your whole life to save this money for retirement. As fiduciaries, we take it to a whole different level. And there's no conflict of interest with fees and commissions, which is super important. 95% of our country is working with just some big wirehouse or, brokerage firm. It's not good enough, folks. We've got to get more diligent. You owe it to yourself to pick up the phone and give us a call and take action, because there's so much more as total planners that we need to bring to the table and plan for in your future.